auto company profits are certainly not 25%, maybe 10% in the best case. If everybody's going to squeeze the supplier below them, some supplier's going to go bankrupt. That supplier may well be a linchpin of a bunch of supply chains that we don't really understand, and we could end up with a really scrambled situation.
Downing Street now believes Britain will be hit by President Trump's tariffs on Wednesday because a deal will not be concluded in time. Trump has vowed to impose levies on a wide range of goods from April the 2nd, which he's called Liberation Day. They're expected to include 25% tariffs on imported British cars as well as steel. Sir Keir Starmer's hopes of securing an exemption for British businesses have faded, despite the efforts of Jonathan Reynolds, the business secretary, to secure a bespoke economic agreement. He's described those talks as challenging. Well, Susan Helper is a former chief economist at the US Department of Commerce, a former White House Council of Economic Advisors. She's now professor of economics at Weatherhead School of Management at Case Western Reserve University. Good evening to you, Susan.
Good evening.
Great to have you with us. President Trump seems determined to press ahead with these tariffs, despite the fact that we're already seeing global stock markets and those there in the US plummeting at the prospect of this.
Yeah. I think it's a kind of lose-lose policy here. I mean, unlike a lot of economists, I actually do see a case for tariffs that would be strategic, limited, accompanied by complementary policies, and implemented with some certainty. And these tariffs have none of those things. So it does seem like it's a particularly dangerous policy, not only for you all, but for us in the US as well.
Yeah, I'm sure that in the eyes of the US, Britain is a relatively minor player. Our exports to the US are not huge. But nonetheless, Britain has been trying to get a carve out for the UK, saying, look, our trade is pretty fair. Do you think there is still a chance that President Trump could agree to that?
I think it depends on your theory of what is motivating. And I guess there is a view that if a country runs a trade surplus with the US, that somehow the US is subsidizing that country, kind of ignoring the fact that, for example, with Canada, we actually get some things for the money we pay to Canada. So if it's a relatively even trade, one might think that might work. On the other hand, to the extent that it's autos and auto parts, there's also some desire that, autos are being a strategic industry and we need to have more autos made in the US, which actually is a goal I support. I just wouldn't do it in this particular manner.
The British government is saying that it's not going to immediately retaliate with counter tariffs, despite the fact that, for example, when Canada threatened massive sweeping retaliation, President Trump did back down from some of the tariffs. Which country do you think has got the right negotiating strategy?
Well, I think it also depends on, what your assets and liabilities are. And, Canada being a very large trading partner of the US, the threats to really entangle our supply chains are quite real. Whereas maybe the UK threats are less dangerous, less damaging. It's very hard for me to say. So I think you could argue that each strategy, the Canadian strategy and the UK strategy, are both correct, given their relative situations.
Well, the Trump administration, we're told, wants to have this big bang approach to tariffs. So it is going to be a huge number of tariffs imposed on goods imported from around the world. President Trump appears to be hoping that this will make sure that a lot more industries base their businesses, base their manufacturing in the US. I mean, do you think that's going to work?
So I should say, it's a goal I support to have more domestic manufacturing, both in the US, also in other countries as well. I think there's a lot of hidden costs, both to the climate and elsewhere, to resilience, to having these far-flung supply chains. But if you're going to undo the current structure of supply chains, it takes a while. It took us, 20 or 30 years to build these supply chains. To build a new auto plant costs about $1 billion or $2 billion. You don't make those decisions overnight. There's got to be some feeling that these tariffs are going to be in place for a number of years. And even if you decided today you were going to do that, in the case of autos, it's going to be a year or 2 years at the very least before you have that new plant in service. Now, there is existing excess capacity in some U.S. auto plants. Most of that excess capacity is for electric vehicles, which, again, I think would be a great thing to increase sales of electric vehicles. But that hasn't necessarily been the goal of the Trump administration.
We know that President Trump is intending these sweeping tariffs to help the US economy. But isn't the real danger here that he's simply going to face a whole range of counter tariffs from countries including Canada, many parts of Latin America, other nations which have significant amounts of trade with the US, that those tariffs and counter tariffs are just going to push up the costs of everything for US consumers, US voters, despite the fact that President Trump has said he's going to bring down the cost of living, and that this is all just going to be counterproductive for President Trump.
That certainly seems to be what the markets and public opinion are saying. And I think you don't even necessarily need retaliation to get the results that you're saying. That, I worry that, there's going to be a lot of pressure on auto companies not to raise prices. It's pretty hard. Auto company profits are certainly not 25%, maybe 10% in the best case. If they're, everybody's going to squeeze the supplier below them, some supplier's going to go bankrupt. That supplier may well be a linchpin of a bunch of supply chains that we don't really understand, and we could end up with a really scrambled situation.
Sorry to interrupt you, but President Trump has just been speaking at the White House, and he said those executive orders will kick in on Wednesday's Liberation Day, and he said this would be like the rebirth of the US.
I think it's going to be something that's going to bring a lot of wealth back to our country, tremendous wealth back to our country, actually. And other countries are understanding it because they've been ripping us for 50 years, longer, but they've been ripping us off for years, right from the beginning. And I think this is going to be an amazing, I call it a lot of different names, but it's really, in a sense, it's a rebirth of a country, because how we could have afforded to do what we did. We help everybody, and they don't help us. The term I like best probably is the liberation of America. It's a liberation of this country, because it's incredible. Look, we have $36 trillion in debt for a reason, and that accumulates over a long period of time. So I think what you're going to be seeing over the next couple of days will be very inspiring to a lot of people.
Well, there we are. President Trump says it's going to be very inspiring to a lot of people. Just listening to that, Susan Helper, a former chief economist at the US Department of Commerce, what do you make of what he's saying there?
Well, so I agree that the U.S. manufacturing is smaller than it should be. I would not ascribe it only to other countries ripping us off, but also to some of the behavior of U.S. multinationals seeking to profit from, very low wages, very poor environmental standards elsewhere in the world. Undoing that, I think, is fine. I think there's a lot of trade, and I would call out trade with the UK as being a kind of trade where, we benefit from each other's strengths, each other's innovations, each other's different access to resources, and it's the kind of trade that should continue. I would also say, in terms of this trade that probably the president and I would agree is maybe not so good, a trade that leaves the U.S. vulnerable to various kinds of shocks like a pandemic or invasions or things like that. That the problem with that in these policies is you actually need certainty, and you need to understand what kind of bottlenecks you've just created in these very complicated supply chains. With the general tariff, there's also very complicated impacts on the exchange rate that's going to undo some of the impact of the tariffs. So I guess I'm not looking forward maybe to complete liberation in the next few days.
So when you hear nations including Canada, Venezuela, Japan and others saying that they will retaliate, do you think we are heading towards a global trade war?
It's possible. I mean, I guess, this term trade war has been sort of thrown around by economists as like this, it's not a shooting war, right? So we shouldn't, I mean, I think there will be bad effects. And I think it could escalate, and how it ends, is quite interesting. My crystal ball is not that good.
Okay, Susan Helper, former chief economist at the US Department of Commerce, also a former White House member of the White House Council of Economic Advisors. It's been great to speak to you. Thank you so much.
Thank you. Thank you for the opportunity.